Welcome back to the Built to Last podcast, where we're trying to have conversations like unscripted, real conversations around what it takes to build something to last. And we often try to bridge the difference between the individual and the business or the organization you're a part of. And we talk mostly with leaders and people who live in both places. And it just becomes fascinating conversations that should be had more often, likely. Our guest today is, I would say, from what I understand, I can't wait to learn more, advises and helps others, but also he himself has gone through this journey. And so I'm excited to hear about some road rash and transferable learnings, but also some of the stuff he's learned from others. Little bit of foreshadowing. I'm going to get you to introduce yourself because nobody wants to read the bio. And I really like to hear how people introduce themselves because usually it's not just what I do for a living. And I love to see a little bit of insight. But the initial contact, and this has been a long journey. I've been hearing about simple numbers, and well before I actually got a chance to meet you, you indoctrinated Colby on the first meeting, and we've heard about it ever since. And so I would love, Colby, for you to take it away and how this came about, and then pass it off.
Sure. Yeah. Thanks so much for being on the podcast, Greg. And
Yeah.
You were so quick to respond, and your folks over there helped schedule it. So that was might be the slickest scheduling we've ever done.
Good deal. I like to hear that.
I saw Greg speak in Whistler at a Metronomics conference, and it wasn't that I wasn't excited to hear something about like a talk about numbers. It was just not really on the radar. I was just there along for the ride, but I was amazed at how much it impacted me and sent me down rabbit holes and got me concerned.
Sent us.
Yeah. And it got me concerned about a lot of things that I wasn't really thinking about. And we had since jumped on Zoom and had another conversation, and then you popped into my head not that long ago, and we decided to reach out. So I will pass it over to you, Greg, to I guess ask, how do you introduce yourself today?
Yeah, so appreciate you guys having me. I'm probably best described as a recovering accountant that has learned a few things about business profitability and creating wealth in the entrepreneurial space. So my practice is solely focused on the entrepreneurial journey, which I've lived myself. And so I am a card-carrying cobbler's child that has had to apply these principles to myself as well as what we did for clients. But, it is an interesting journey that I am enamored with the built to last, kind of idea because I love to pick on Jim Collins. I've never met him, but I always mention this frequently in my talks that, hey, if you read Jim Collins' book, Built to Last, there's only one problem. Those companies didn't last. And then if you read his next book on Good to Great, there's only another problem. They didn't stay great. And then he wrote the apology book of Why the Mighty Have Fallen. And so business is hard, but I believe in the concept of simplicity. And really, a lot of times you have to go back and reassess, look at things with fresh eyes. And started off, CPA firm that after a stint in public accounting to start with, a controller, 3-year controller as a bank where I learned my technology skills, fortunately, because I'm basically lazy at heart. Once I got a hold of a spreadsheet, it's like, hey, my world changed. And so I was an early power spreadsheet user, but you got to go beyond the tool and what is the learning and thought process. And, I kept finding in my practice entrepreneurs that ran successful businesses in spite of the data that I gave them when it was time to send a financial statement to the bank. And they would say, thank you, give it to the bank, put the statement in the drawer, and keep looking at these pieces of data that didn't agree with any accounting principles that I was ever taught. And as I decided, instead of fighting with them, what are you seeing that I'm not? And learning from them, I just kind of was enamored more in the consulting side of the business. It was more interesting, but I knew that applying business principles, if I was going to create a consulting business, I had to have a repeatable process. It had to evolve beyond selling hours to, okay, I'm skilled, task me for a problem. No, you've got to create a framework. And unfortunately, accounting has not evolved since the 1400s when Pacioli invented it. And it really was stuck in, some basic principles that obviously, kind of were built in a time before technology. And fortunately, I joined the Entrepreneurs Organization in 2001 and re-identified myself as an entrepreneur rather than accountant. And fortunately, I
Is that when
started.
that happened? Is that the first time you thought of yourself as an
Yeah,
entrepreneur?
absolutely, absolutely, absolutely. And in my first forum meeting presenting on my business, I asked my 9 other forum mates that I couldn't do business with because of forum rules. You don't join EO to get business. You join for peer, support.
Mm.
And there's 9 other businesses that I would love to have as a client. And I'd ask them this question. I says, how many of you would you recommend your current accountant? And the answer was 0. And so if you apply the net promoter score concept to that, that's a really bad score, a 0 for a profession.
Yeah.
And it's like, okay, well, let's apply the famous concept of asking why that Simon Sinek took a 3-letter word and made a great living out of. And so I said, well, why? He says, well, they're okay, but they just don't really do what we need. He says, okay, well, what do you need that we're not doing? First answer was, we don't like the tax day surprise. Okay, well, I know how to fix that, and it's not free, but you can do it in a reasonable cost way, which 99% of our profession does not do. I get that. So what else? It says, we don't like being billed by the hour. And it established this core concept that we live by today in our practice, that we don't bill by the hour, we bill on a fixed price basis. If you bill by the hour, there's only 2 possible economic outcomes. You either gave away your expertise or you charged for your ignorance, and both are bad.
I like that.
Yeah. All right.
Yeah. And especially like all professional services are dealing with this even more every day because tools are making it easier to save time.
Absolutely. And they're going to have to learn how to charge on a fixed price basis given the current tool environment. So we can chat about that later. So then, but I said, okay, what else? Well, this was the thing that changed the direction of my life, forever. And they said, oh, by the way, you see hundreds of businesses' most intimate details. You ought to have some idea what works and what doesn't. Okay, well, they didn't teach me that in school. They taught me how to take the data and produce a financial statement. Some minimal analytical procedures, but it is laughable what the accounting profession has in their professional standards for what the analysis we're supposed to do when we're producing financial statements. There's no analysis. You're just looking for, oh, advertising is up. Oh, payroll taxes is down. That's not analysis, and so anyway, I started chewing on it, and as I got more exposed to EO and the people that were in it that I found, interesting and intriguing, I had some ideas, and they were early ideas, and they just, I kept using them as foils to bounce things off of, and really, it just got to where I started putting some of those things down on paper, started to talk to people about them. And I started a book concept in about 2004 and got stuck. I wasn't a writer, I got writer's block pretty quick, but I had some good core thoughts, but I ended up getting asked to be on the EO Global Board in 2006 to 2009. And that was a really helpful event because, one, it took me away from the office because it broke me away from the day to day, but it also gave me confidence to share my thoughts and concepts to entrepreneurs around the world. I mean, I flew, And I didn't have a passport until 2003. And last time I checked, I think I've been to 55 countries since 2003, and spoke on my material in about 20 countries, and presented on it. And so, but that kind of gave me the confidence that I was onto something. And the next kind of major career flip was when I rolled off the EO Global board. It is a very unique board. I was spending 12 weeks away from the business in board service in this role. And so instead of putting the 12 weeks back into the business, I used that summer to create some content for the accelerator programs, cash day, at that time. And I did about 15 presentations that summer in different cities. And that presentation back and forth with the audience, it's like you're like a stand-up comedian. You're practicing your content and saying, how do I say this that I want to get the response? And do they understand it? Can I say it differently? Do I need to present it differently? And at the end of that summer, I felt like, okay, that was really the core content that I talked to a self-publishing book company that would help me develop the book content. And I used that outline, to create the first book, Simple Numbers, Straight Talk, Big Profits, which was a very painful process, because not being a natural writer, we presented it and had it transcribed, had a ghostwriter, Beverly Herzog, was helped me produce the first draft of the content. But then I had to go through like 3 rounds of painful editing, fighting. Fortunately, I owned the content, so I could make any decision I wanted. But I had to fight with the editors because he wanted to make it a textbook, and I go, no, you don't understand my audience. I'm speaking to entrepreneurs. They understand how to use Google to look up what a word means. I don't need to define every definable term. And so got it published in 2011, and we were well on our way with proving our consulting model that lived with fixed price. We did a fixed price initial event, and if you wanted to do ongoing service from that, it's a fixed monthly fee, from there. And we were getting good traction, and it was just about getting known, at that point. But to get to that point, it forced me to do something that CPAs don't do. I had to go study data of a data set of 50 clients and not get paid for it. And that's kind of rubs against the profession's mindset. But it was magical because I uncovered truths that had been hiding in plain sight ever since the beginning of accounting. And some truths you didn't do early on because technology would have prevented it. Without technology, you couldn't easily do it. But others are concepts that should have been formed from the beginning. And one of those is gross margin before labor we think is the true economic top line of the economic model, not revenue. Revenue is a canard. Revenue is all over the place. I discovered, I guess, that if you filter out cost of goods sold without labor, get to gross margin, and use that as the top line of the business and measure profit to gross margin, not profit to revenue, every business and every industry pretty much looks the same globally. Every industry, every business globally looks the same. And it creates a universal leverage concept that all businesses have to function under. It is your ability to lever $1 of labor, regardless of what that labor does, is what distinguishes you from being a good business, great business, or a sucky business. And if you're not good at leveraging labor, just go get a job. I mean, it's like you're not cut out for the entrepreneurs. And I'll get in trouble for saying this, but I'm going to say it. I appreciate the solopreneurs of the world. They have a place in the world, and there's a lot of activities that fit the solopreneur concept, but they are not entrepreneurs. I I do not put them in the entrepreneur capacity, because if you're not willing to leverage other people's labor that you commit to in an employment status, not a contractor status, you're not an entrepreneur in my book. I may have pissed off a lot of people, but
Well,
okay.
we've had that conversation because I don't remove the label entrepreneur, but I do think there's different types, and
Well,
it's not the same.
Well, because there's been an elevation of this concept of solopreneur, I think that is the appropriate title, and take pride in that. I mean, I've had some solopreneur accounting clients that were high earners. They could make $1 million a year clear after expenses. That's phenomenal. And
I like the two lines of there's self-employed, like electrician, for example, who just does his own thing, like self-employed, and then there's solopreneur that are running things, investing in things, but don't have employees, and then more.
Well,
there's layers.
Well, see that you're getting over into. I don't consider that is a preneur at all. That person is an investor. So there's an investor that you're not operating a business activity. Investing is its own unique thing. But to be an entrepreneur, you really have to have an operating capacity. You're interfacing with a customer, on a regular basis, one way or another. And if you're a solopreneur, you can have that, but you're not interested in leveraging committed labor. If you're an entrepreneur, my definition is you're leveraging committed labor. And one of the things that changed in the last 20 years, in the first time in history, is business went to a committed labor model instead of a flexible labor model. Labor is not variable. Labor is you commit to the team that you have pretty deeply, and you only flex it up or down in harsh need, rather than, I'm going to cut your hours, by 20% this week because things are slow. Businesses that do that in this environment, you don't keep those employees very long. Yeah, you might get away with it a time or two, but you learn pretty quickly, that's really kind of a bad idea. I might maybe use temp labor to flex up, and that's even getting harder to do, in the environment. But
what do you think about the companies now that are really like this? We see a lot of people using fractional supports, like they've outsourced marketing, they've outsourced CFO, they've outsourced bookkeeping, they've outsourced, and so they have a lot less salaried employees.
Well,
but they still have committed labor.
Yes, but those fractional resources are technical functions that were overcharging you for. You had underutilized people. I mean, and I'll pick on the accountants. Outsourced bookkeeping is a really good idea, because when I explain to a business right now, what do you need in accounting support, you might need a CFO maybe an hour a quarter. There's a lot of people carrying the CFO title. They ain't a CFO. They're a glorified accounting manager a lot of time. And I mean, how much strategic finance do you do on a daily basis? Not much, unless you're doing a lot of M&A. And so you need maybe a little bit of a CFO once a quarter. You need a controller one day, maybe a day and a half a month. You need an accounting manager one day a week. And in the world of AI, if you really think through your data flow, you don't even need a bookkeeper anymore. If you design your data system correctly, your operators are doing the function of a bookkeeper now by completely filling out an invoice correctly in a digital environment that sends the pieces of that invoice to the correct accounting classification. And you only need to think about it once. And the data then is there for the strategic, people to look at. That is mostly the
and
COO.
Get the humans to change their behavior.
Exactly. But really, and to that point, I consider myself a behavioral economist now, more so than anything. I'm creating data to get your people and you to do what's in your best interest with the data that I present you. But because The traditional financial presentations are woefully inadequate to actually change human behavior. And there's deep study and I mean, one of the most fascinating fields of study is behavioral economics. And if I was going to go back to school, I'd get a doctorate in behavioral economics.
That's okay. So I'm even more hooked now. This is good.
Yeah. So let me give you one more little piece to the present day. So anyway, we built a practice that didn't exist, and I figured out how to teach other people to do what I do, because I'm just a solopreneur if I don't have other people that do what I do. And so, fortunately, I had people that stuck around that learned it, and we created a vast onboarding process now that we can add new consultants fairly rapidly because of the content that we've developed and the ability to test people on, do they understand the content, and demonstrate to us in the onboarding process that one of the key critical failures in the financial world is people have the ability to talk the numbers, not just present them. And that usually is the filter that keeps somebody from working with us. You can be a great spreadsheet jockey, but if you can't talk the numbers to the client without, and not just read them what's on the screen, I mean, that's not going to work.
We select team members on conversation leadership, hospitality, being able to connect the dots and lead people more than, because we can teach the technical, we can teach the process.
Absolutely. So anyway, get to 2020, we merged with a national firm, Carr, Riggs and Ingram, and that was just a merger. And so we became an independent operating unit, underneath them. And then Carr, Riggs took on. They were one of the top firms that took on private equity investment in 24, and firm is rapidly growing, doing more aggressive acquisitions now. I mean, I guess we'll probably be over $1 billion in revenue, within a year time. We're getting close now. Our operating unit, we're just a small part of that, but they're finally excited for what we do, and we have some support within our new CEO to really give us the resources to grow more aggressively. Because I really think what we do is the best kept secret, in entrepreneurism, because and a lot of times our bigger clients that have in-house skill set in the finance team, those people see us a little bit as a threat, and we go, well, not if you'll work with us, and we'll help you be the hero. And when we get a chance, I mean, we usually are pretty good at winning them over. A lot of our clients, though, that don't have anywhere close to that skill set, we're able to elevate a basic accounting manager running your books and add in this skill set that doesn't take a lot of time, because this goes back to my thing that I learned from my peers have said, we don't like being billed by the hour. When you don't bill by the hour, you get really motivated to do things really quickly and don't waste time. And we find that our process of an initial session, a discovery session to tell you, here's where you've been, here's where you're at, here's where you're going. Are you going to change that trajectory? And that's typically a 1-day session or a couple of Zoom calls that we do it remote. And then ongoing service is we grab your data once a month, put it in our model, have a 1-hour call. We rarely need to exceed the 1-hour call, but we're happy to have an extra call if you need one, because you're on a fixed price agreement. And the only thing that changes that is if you ask us to do effort other than calls outside, that agreement. And it really is an efficient process, because as much as we've given rise to the business coaching world of, daily huddles, weekly meeting, monthly meeting, quarterly meeting, annual meeting, my contention is we spend too much time in those meetings. Those are really good rhythms. What I'd recommend 100% doing all of those. But if you're really efficient, you can communicate clearly with all that. And one of the things, and we support, the reason why we work with a lot of metronomics coaches, we're good at the strategy quantification concept. You have an annual meeting or quarterly meeting, come up with a strategic priority. It sounds good, but did you put the math to it to say, is this really going to accomplish what we want? And there's very few coaches that are good at financial quantification, but we love supporting them because I don't want to do what they do. And I don't want our team doing what they do. We love supporting all coaches, all versions, all platforms. We're coach agnostic. We have our favorite coaches that we like to work with because we work really well with them. But our focus is creating financial data that changes behavior. And at the end of the day, and we really believe that it's not a lot of numbers that do that. It's the ability to simplify it down to the handful of numbers that matter and have high confidence in the correlation of the numbers that we're connecting in that process. And also, you see the data in more of a flow state rather than a static state. I just get really agitated when I see accountants produce this year versus last year. Okay, well that's one data point, but where is the direction? Because plotting between only two data points doesn't give me high confidence that you actually know what direction they're going in. The other thing that just chaps my rear end is we over focus on year end data and don't run a live set of books where every month ends a 12-month accounting period. And we're huge fans of rolling 12, rolling threes. And the profession should more focus on creating clean operating data every month, because in 1983, with a prehistoric IBM PC and a 5 1/4 floppy disk I was maxing out memory capacity, RAM and storage capacity with every rev that I did. I took my bank from my predecessor reliably delivered bad financial statements that were wrong the day of the board meeting, the third Wednesday of every month. I closed the books by noon of the first day of the month with very highly accurate, never changing financials because it was conceptual. You figure out the bottlenecks, you figure out the flow. And if I can do that with a 1983 PC, why in the hell does it take you longer than a day to close a month in 2026? That just galls me.
Well, we're living very much in that space. Typically it's people, or I find it's like getting the information in and being open to re-engineering those processes or those tools or those systems. And
exactly. But
we think of ourselves like it's a change management piece first, because there's answers, there's systems, there's somebody's wrote the book, but getting people to do it is a whole different kettle of fish.
That's right. But I've never found an environment that it couldn't be done. Yeah. You got to, but a lot of that, but see, those are the kind of things that is the add-on of when we start working with a client. Yeah. We give you that initial analysis, but then the ongoing is the process of optimization. It's like, okay, can we get data faster? Can we, the closer that I can get the relevant data to the time that we're discussing it, I can win your behavior. The longer the distance from the data to when you're time of discussing it, I lose signal value, and I've given you an open window of excuses. Oh, that's changed since then. Really?
It's kind of like if you don't rub the dog's nose in something right when it happens, you might as well not do it.
That's right. Absolutely. I like that analogy. I haven't used that, so I'll steal that. Yeah. So anyway,
you mentioned earlier, I know that you're probably midpoint, but you mentioned that you did a merger. What was the reason that you decided to be a merger and no longer like you're at the top? Because we exist as a merger, like Colby and I, in much smaller versions, came together as a merger in early 22. I didn't realize that in your history. What was the reasoning?
Well, I mean, looking at it, one, I had partners that were nearing retirement, that, there's got to be an economic process, to deal with that. But I wanted to get rid of the traditional, uh, types of work, the financial statements and tax returns. And so merging with a company at that time that had 60 locations all across the South at that time, we were like North Carolina to New Mexico. I thought, okay, well, I can shift this work that I don't really like doing, and I don't really make any money on it, on top of that. And that was a slower process, but also, I mean, the synergy, thinking, okay, well, we got a bigger pool. Fortunately, even though you can't solicit an EO, I do a lot of work with EO. I get asked. I've never solicited anybody. I've never asked to go speak anywhere. I just respond to when they ask me, and and that's been good. But we're now in a point that we've got a CEO of our firm now that wants us to aggressively grow, and we're going to get the resources to go do that, and that's going to be exciting. But in the merger at that time was more so, even if we don't sell to them, which we don't really do a lot of because they're accountants, they don't think like we do, and they think they do what we do, but they don't do what we do. And we're slowly winning them over, and so it'll take time,
Play the long game.
But the fastest course to a new client is somebody that's not one of the firm's clients. I mean, those people are, we have a high close ratio once we get in front of somebody and show them what they're not seeing. And so it's really just, getting in front of folks. And a couple of the areas that are just super exciting, though, that we love, I mean, this is like not work, but we still want to charge for it, is we do group presentations. And man, that is just like the funnest thing ever. And with AI, we've got the ability now that we can take a group and grab their data very seamlessly and build a group model. And what we can do is take everybody in the group and do like 45 minutes to an hour and what I lovingly call the hot seat. And so you get a group business together. Now, and this actually is rare. It's actually rare that entrepreneurs have the courage to put their real numbers, that we're presenting truth. We're not presenting something that they gave to a third party and manipulated for their own ego. We're taking the raw, unadulterated truth. We're going to adjust for market-based wage for the owner. And if you're undercompensating yourself and telling yourself you're profitable, no, you're not. We're going to put your market-based wage in there and show you what your real profitability, and show how you're underperforming to what you should. If you're overpaying, we'll move it down below the line and show you, okay, this is your true profitability, and are you damaging the business by what you're taking out of it, but not just the P&L, but also your capitalization. And so this was the thing that I was really fortunate, and I still get to do this for EO. I get to chair an executive ed program at Wharton Business School with two legitimate professors, and they let me present as well. And that was really where I learned the concept of return on invested capital, which is really, return on invested capital is the most important metric that nobody knows about in entrepreneurism. And it means that what are you making in income flow relative to what you had to invest to create it? And to my knowledge, I am the only one in the private sector that measures and has opinions on what the appropriate return on invested capital is for a privately held business. Because we've got hundreds and hundreds of data sets that we actually do that calculation on.
Well, to be honest, I'm trying to think of how, because we don't have that calculation. Like we're coming up on a fiscal year end and we put all of our investments into launching bookkeeping business, time
Yep.
investments, money investments. But
Mhm.
the revenue is at the very beginning stages. So I think that would be an interesting thing for us to measure going forward. But I don't know. We
Now
don't have that.
just read Simple Numbers 2.0.
Yeah. I'll read it again.
Yeah,
That's my problem is I feel.
because really, well, and this is kind of how that played out in the first book, Simple Numbers, Straight Talk, Big Profits. I was touching on that concept, but I didn't have it completely settled in my head. And we started the Horton program in about 2013, 2014. I forget which year. I think it was 2014. And I'm sitting through the class the first year, just like everybody else. And David Wessels, the lead professor, is just awesome, awesome professor. David's talking about return on invested capital. And it's like, I mean, I've heard of that. I mean, I did that calculation theoretically on public company data in college, but I've never done it on a private company. And so I lead the class. And so think of it like this: return on invested capital. I mean, if I said return on equity, would you understand that metric? So return on equity is just net income divided by equity of the business. Well, invested capital is slightly different than equity. You got to make adjustments to equity. Equity is a flawed number, and because you don't know how leveraged you are, and you don't know if you're running trash through your balance sheet, which 99% of entrepreneurs do. They have non-operating assets, non-operating liabilities because it's their personal piggy bank. And so to create invested capital, you take equity and you ignore assets that aren't necessary to operation of the business, shareholder loans, goodwill, liabilities, shareholder loans from shareholders, or other things that you borrowed money in the business, or liabilities that you book, but it's not relevant to the current operation of the business. And you have to get to this adjusted invested capital number. We do one more turn. We hold you accountable to our core capital standard of 2 months of operating expenses in cash with zero drawn on a line of credit. So I will not give you a return on invested capital of a leveraged number. I'm holding you accountable to the cash you should have, whether you have it or not. And if you have excess cash, I take excess cash out of it. So I either side of it, we get you back to that number. And that's the adjustment that has always been needed to make this a critical metric. But the profession didn't have any knowledge. You couldn't get the profession to agree on what cash number should you have. I created the standard when I created the core capital standard of 2 months of cash with zero drawn on a line of credit as being the definition of a fully capitalized business. And because we have a standard. You
tell me if I should just go. Oh, sorry.
No, go ahead. Yeah.
Because maybe I just need to go read the book again. But I'm just thinking through, like, in the situation we're in, we have some money in for sure, like tracked. But a lot of it is like we took billable team members out of billable and like effectively took that salary, that labor component, and invested it into the internal build. Is there a way to tie that into? Because that's actually going to be a bigger part of our investment in this new service.
Well, so yes, you need to read the 2.0 book and then focus on chapter 6 called Launch Capital. So the internal build that you're doing, did anybody stick a gun to your head and make you do it?
Well, we did, maybe.
No, the market's not making you do that. I mean, you don't have to do that. When you intentionally reduce operating profits with a choice that you're doing, we named the baby. There wasn't a name for this prior to me writing the 2.0 book, and we call it launch capital. And so when you look at the capital concept of a business, there's 4 components of capital, 3 on the balance sheet, 1's on the P&L, which that if you say capital's on the P&L, it'll blow accountants' minds, but trust me, it is there. The 3 ones on the balance sheet, in which this is the sum of all invested capital. Your core capital, your 2 months of cash minus line of credit, so that's 1. infrastructure capital, your fixed assets minus depreciation, minus the debt connected to that fixed asset. I'm looking at the net number. So notice in those first two, I have no problem reaching across the balance sheet between the asset side and the liability side. And in the accounting world, assets on the left, liabilities and capital on the right. That's not the functional way that a balance sheet needs to be managed. You connect assets and liabilities to their functional purpose. And the three functional purposes is core capital, cash minus line of credit, is your true net cash. Infrastructure capital is fixed assets minus depreciation minus debt connected to it. And then the last piece, trade capital, which is working capital minus cash and debt. Cash and debt should have never been in the working capital definition, but I couldn't change the classic definition, so I had to come up with a derivation of it. And so that's why I call it trade capital. Trade capital is everything that moves and turns over with every transaction of the business. Here's what we found. Universal standard. If you're in a developed country with traditional business trade terms, if you carry accounts receivable and inventory, you should be able to have a minimum 50% pre-tax return on invested capital. Now, I measure the pre-tax because tax systems and entities and taxation on entities are all over the place. Just take them out of the equation. Let's think about pre-tax. You know, if you invest in a bond at 6% interest, it's taxable. And that's what you measure your mindset around the yield of that investment. I want you to have the ability to look at your business and think the same way. So if I'm effective at investing in my business, I want a minimum 50% return I want to see net income. If I invest $1 million net assets minus liabilities to be a fully capitalized business at a 50% return, my minimum pre-tax profit should be $500,000 a year. And so then I go over to the P&L and then, okay, how do we get to $500,000 a year with this amount of money we invested? Because that's the minimum performance standard. And that's in chapter 5 of the 2.0 book. And you'll see 4 examples that we use in that book to prove that point. If you carry one or the other, AR but not inventory but not AR, you should be probably 60 to 75% return on invested capital. If you are a business that's blessed with don't have to carry neither, you get paid upon performance or you get the bill in advance, you should be well over 100% return on invested capital. You know,
so
and
just a thought. I'm listening, and because I'm following, and I did the accounting
and you're
courses,
processing the numbers,
and but I'm just sitting here as like the thought that I would have to bring the level of detail that you just explained to most of the business owners we work with, like they're not going to this isn't like they want to do the work they do. How do you feel like everybody has to learn this? Or can it be done to them? This is a level of detail that even the smartest entrepreneurs I know, a lot of them aren't interested in learning even the stuff that we've talked about today.
Well,
any thoughts on that?
We're pretty good at making them appreciate it in a very short period of time. Because when you're working, so we're sitting here talking theoreticals.
Yeah.
When I take their data and put it in front of them and walk them through the standards, they get it.
That would change it.
They get it. Because once again, you have to have data that connects to the human, emotion.
Yeah.
And when you're looking at your data and understanding, I had to buy something, I had to put money into something to make it happen. And everything that you put money into has 2 components. That the P&L has 2 components. It has an engine and it has a chassis. The chassis are the things that you're going to spend money on regardless of whether or not you have a dime of revenue. And the engine is 3 numbers. Revenue minus non-labor COGS gets to gross margin. And then gross margin minus direct labor gets you to what we call contribution margin. Most everybody calls it gross profit. but there's a long story that goes along with why the changing of the term.
Hmm.
But really you only you only focus on three numbers of revenue, COGS, and direct labor as components of the engine of the business. And in these days, we all run committed labor models. You don't flex your labor up and down. And so, but you do flex cost of goods sold primarily up and down based on volume. And there's a handful of businesses that don't have much flex, but 99% of them, that is a true variable cost. Labor is not a variable cost these days. We do not have so much excess labor that you can't turn labor disproportionately up or down and without using, temp labor that's under contract to be temp, and you pay a hefty premium for temp labor. And every business model that we work with, you're trying to get off of temp labor as fast and quickly as you can, and because you can't make a margin off of it.
Hmm.
Yeah. So really, I mean, but learning those concepts, that was the piece. And so the interesting story is, I went in the recording studio after I finished the 2.0 book in 2020, and recorded the audio books for both in 21. And at that time, I hadn't read the first book in 10 years. And I'm thinking, oh my goodness, what am I going to read that I don't want to admit to? And so I remember having a moment to myself as I finished the first book, and I go, man, that's a pretty good book. But then the second thought that came to me though was, I did not remember all of the little Easter eggs of questions that I left unanswered, and left the questions in the text to myself and forgotten about. And I answered every one of those questions with a 2.0 book with the return on invested capital concept. That was the piece that my brain was searching for, and I didn't have that context or rule to put it in form. And so today when I do a presentation, I give, I say, I'm going to give you the 4 numbers that you need to be tracking. And I guarantee you 100% of you, unless you're one of our clients, you're not tracking any of these 4. Number 1, return on invested capital. Number 2, profit to gross margin, not revenue. Number 3, total labor efficiency ratio. Number 4, core capital to the 2-month standard. Are you over or under? And if you know those 4 numbers, you're playing a different game than everybody else in the marketplace.
Yeah.
You had mentioned, we had a short pre-call. You had mentioned that you're working with upwards of 100 different companies to kind of.
We got probably about 350 active clients. You're talking about the 100 company model?
Yeah.
Yeah. Okay.
Yeah.
Yeah. So we take a subset of our current client base in our model, we touch their data every month. And so we're real time, context. It takes about 30 days after the month ends before, we got all of them in. But in the second book, I used a 50 company model to do a lot of research for the second book. And we decided to up it to 100 companies after the book was done, and just update it every month. And it has turned into a really powerful tool because it's real data that has been filtered to eliminate distortions. And it's about 1.4 billion of revenue. So average company size is 14 million, but we've got a group of companies below it, group of companies above it. We keep our super large clients out of it because they'd be too distortive. But I believe it's given us the more clean insight of what the U.S. economy. We only use our U.S. clients. We don't use our international clients in it. But our read of the market is, we saw this slowing of the economy in 2019 before COVID hit. And so that was the beginning of the demographic shift of the baby boom generation leaving the workforce. And then COVID makes 2020 unusable for analysis. But 21, you can see the impact of $15 trillion of stimulus getting thrown into the economy for PPP, ERC, and a bunch of other things. And you see it push. I believe true inflation was in the low to mid 20% range throughout 21, and that's what our data says. You can see it peaks in early 22, and then when the Fed starts cutting interest rates, everything falls, and you plane out in more of just an inflationary growth cycle. Now, one of the interesting insights that we got from that is when we plot the components of our simple numbers P&L on a year over year rolling 12 growth rate, we started to identify, we feel like that non-labor operating expenses, facilities, marketing spend, other OPEX, the general catch-all buckets of things, these are services and things. We feel like that is giving us the cleanest picture of true total inflation, because the government's data it's cherry picked, and it mostly measures things. The government has no concept of how to measure services, and services are a critical component in inflation. And so we saw this number go to zero at the end of 20, which is correct because economic activity in 2020 was flat. And so when activity is flat, non-labor OPEX growth rate should be zero because you're not having to put out more, and these things shouldn't really change much in price. In 21, when the stimulus happened, that non-labor OPEX shot up as a growth rate into the above 20% range. And then it came back down, and it should have come back down to zero in late 23, 24, and it has stayed at about 8.5%. And so that's where I get my confidence from, is I will say that I believe our data says true inflation is 8.5% right now across the board.
Can I assume in this model you're able to watch like any pattern changes by industry or region or those types of things? Like, are you able to see?
Somewhat. With only 100 companies, I mean, we do have it segmented by industry, but we don't publish a lot of that data. We have some other industry groups that we do masterminds for that, we'll talk more extensively. I mean, probably when I'd probably like to see, 10 to 15 company data points for an industry. And we have several industries that we do 10 plus company member data sets for mastermind groups. And those are really fun. I mean, when you get a group of the same industry and everybody's willing to get naked and share their data, I mean, you really get to see people change their behavior and to the good. And it's sad to also see some people that are resistant to change, even though they've been given the playbook. And so there is a high executional component to success. The playbook is 20% of the success factor. 80% is your willingness to doggedly execute to the highest levels. I believe is what creates the separation of the people that succeed and then those that don't.
For sure. Small tangent before I lose it. You mentioned you recorded your audiobooks.
Yeah.
Not necessarily specifically Ironhouse Pro, our company, but I wrote a book around critical thinking, especially for young professionals.
Yeah.
I'm about to record the audiobook.
Mm-hmm.
How was that for you to record it yourself? Did you find that a challenge? Like I've been talking to people around like trying to keep that. I'm worried I'm just going to go off on tangents.
No,
I'm going to want to anecdotally add to what I wrote 6 months ago.
Well, I mean, you can, but I mean, I didn't hold myself to the standard of reading it literally word for word. Okay. But it was pretty close, because the second book I wrote every word first. I didn't need a ghostwriter because I'd written so much by that point. I'd kind of got the hang of it. The first book I did a little more adaptation because there was a few places that, if I had a current way that I would say something that was slightly different than what was originally written, I didn't hold myself to that. But I didn't try to add new content to it. We had a client that does podcast recording or our audiobook recording out of New York, and they organized. I just went to a recording studio in Nashville, Tennessee, and it's the same studio that records Max Lucado's books, and so the audio engineers were phenomenal. I mean, so so that process it took me 6 hours of recording time for each book to knock it out, and so it was. And I talk for a living, so I'm used to talking. So
Yeah. Yeah. I'm going to bootstrap it just for as a learning experience. So it'll be a different thing, I'm sure.
yeah. All right. What else?
So you obviously you're so in, like, I love that you care so much about the impact of what you do and the purpose behind what you do, the why. Before we jumped in and hit the record button, you talked about you never want to retire.
Yeah.
And now you're playing a bit more of a long game. Like we talked a little bit about health, because you're seeing, like, you want that faculty, you want that competency, you want that ability to continue, because I don't want to retire.
Yeah.
I'm living in this space because my parents have now both retired just recently, and they're not ever done business for themselves, and they're like, retirement was the absolute goal. And so I was like, I can't believe how different my mindset is, because I'm much more similar to you.
Well,
I'd love to hear your current thoughts on the coming years, like your later years.
I didn't write the first book until I was 54. And so I don't know that I could have written it sooner. I needed the life experience because I'm a change agent to a very stuffy profession, and that's really stuck in their ways. And so I look at my profession as there's three needs of what we do. You need third party reporting. I get that, but I don't want to do it because I don't think it's actually the best product that we put out. Tax, I am so done with tax. I mean, it's necessary, but I'm glad we've gotten all tax prep out of our office, and that's done by other offices that have plenty of tax people. But in our market, our office for us is in Huntsville, Alabama, but 99% of my office's revenue is not in Huntsville, Alabama. We just couldn't hire the tax talent to stay ahead of the curve. And it just wasn't a worthy fight to change the tax preparer's mindset I wanted to be able to do tax returns the way we do consulting. And that was just not going to happen. And so I wasn't going to die on that hill. And so fortunately, that was a benefit. I finally won my case we just refer those out to the other offices, and they're really good at it. I mean, so let them be happy with it. So what's left with is what I consider the highest value that our profession could provide, and that what we're providing is actionable data to optimize your economic outcomes in your endeavor in your business. And the traditional mindsets, I had to go rediscover financial concepts that have been hiding in plain sight to do that. And we continue to refine those ideas, in that process. And doing that at this stage of my career, I mean, one, it's fun. I mean, I get my team it's not just me. I mean, I got a team of people that, there's nothing that I do that somebody else in our office can't do. I mean, so I truly intentionally built a business that if I get run over by a truck today, okay, it's simple numbers are going to keep going. Both books, timeless. The concepts that I talked about in both books is never going to go away in that process. And so, but when we get to see this change and people send you letters of appreciation of, you saved my business, you saved my marriage, you saved my family. I mean, why would I stop doing if I'm able to do it? And I enjoy
even see
it.
them like on your personal LinkedIn testimonials for you as a person. Like you have really meaningful written pieces for sure.
Yeah. Yeah. And like I said, it's impactful. And I think, we still only scratch the surface of who we can help impact, in that process. The other side is just personal love. All of my peers have retired. And so I'm 68. I feel like I'm 50. I can still hit a 250 yard or more drive on my, I still carry a low digit, a single digit handicap. And so, I do play from age appropriate tees. I'm not crazy. I'm not trying to play from tips, but, you know, but it's not shabby that at 68, I can hit a 250 yard drive and shoot. I mean, my lowest round this year is probably a 72, 73, somewhere around there.
Well, that's awesome.
And I'm headed to Scotland this next week to play golf for a week. And so, my goal right now is to shoot my age. And so that my age is getting, that differential is getting closer. I've gotten, you know, 4 or 5 times I've gotten within 2 strokes of shooting my age, and it was within my grasp. So that's my next golf goal. But I just
let's hope that happens in Scotland.
Yeah, that'd be fun. I just look at the lives of people when they retire, and the successful retirement of my observation is somebody that had a job that gave them a good living, but they didn't have the enjoyment that I'm getting from doing my job. And that works because those people go find active things to do in retirement of woodworking or whatever. I couldn't get 2 pieces of wood to fit together if my life depended on it. So I used to watch This Old House with Norm, and he had all the cool tools, and I tried it, and because a lot of friends are really good at it, and it's like, nope, I'm the guy that can't do anything in construction, but I can tell you how to make money in it. And so, and I just look at even my golf buddies that have retired that play more than I do, and back surgeries, knee surgeries, hip surgeries. It's like, and so I just started really focusing on, some alternative, health measures of, peptides and those kind of things to really kind of turn back the age clock. I can't turn back the years, but at 68, I have nothing that hurts. How many 68-year-olds can say? I couldn't say that at 50. And so I, we'll see, but it's I can do a testimonial of the amazing health generating powers of what's available in the marketplace. And it's not covered by insurance, but it's not unaffordable either. And so, yeah.
I feel like I should know this, but are you a married man?
Yeah. Wife and 4 kids that are all about plus or minus 40, plus or minus 2 years of 40, and 7 grandkids.
So that's where I think it's going to be a problem for me is like when my wife wants to retire, then I'm going to have to I don't think she wants to be my +1 on work trips I enjoy.
Yeah. And unfortunately my wife loves gardening, and she retired like 8 years ago. And so, and so, yeah, I mean, earlier on, a couple of years ago, she was more asking, when are you going to retire? And it's like, I don't think so. And really, I mean, I love what I do. I get paid well to do what I do. I still have a significant invested interest in the firm, in stock. That's only getting more valuable by the day. And it's like, why would I quit? But the biggest reason, and I have flexibility in my schedule. And so I've learned, and this is a productivity point that I do want your audience to hear. I hit a turbocharged productivity point in my career about 10 years ago when in the consulting process to make that work, because we don't have a busy season. We're busy 12 months out of the year. And so, and because of our consulting projects, it's not one person to a project. We take the project and break it into the skill sets to optimize how that project works. And so there's a person that sells it. There's a person that schedules it. There's a person that builds the model. There's a person that reviews the model. There's a person that delivers the service, from the model. And so some of those can do more than one thing, but it could be 5 different people that interact with that process. So you have to be very calendared, because when we schedule a call, you show up for the call. And when I show up for a call, I'm counting on my team to have updated the model, and I'm bringing it up and living in it, in front of the client. And one of the things that we do that is uncommon, we work live in front of the client. And so when we're doing analysis, we're in a spreadsheet for a reason, because we're doing on-screen calculations of what ifs in almost every call. And so we're very good at taking our conceptual model and doing quick what ifs quantifications of, if you do this and get this result, here's the impact. Is that significant enough to give you motivation to attack this problem in that process? And so to do that, we had to commit to, 80% of what's on my calendar, I didn't put on there. Somebody else put it on there. So it made me block times that I don't want to work, and got very intentional. Well, once I got to calendar, I don't have a to-do list. Everything that I know that I'm supposed to do, it's on the calendar, either put there by somebody else or by me, whether it's a task or a meeting. The freeing aspect of ending every day with no to-do list, starting every day with just opening my calendar and go, okay, when do I start and what am I doing? That is a powerful freedom, I'm telling you. And
Wow.
and when most people at my age are on the down slope of their productivity, I'm finding new productivity, steps every month, every year, from that. So it works out really well, but it takes a little while to get to that transition, and you have to have everybody cooperative. But we just made it a mandate, that's how we live. And
Wow.
Colby?
I was just gonna say, do you we've been what did our mentor say, floundering around for a few years trying to figure out
we've been there.
what exact we're bringing to the market, and we found ourselves being a lot of things for a lot of people. And we've since narrowed that down a little bit, and I'll let Levi speak to kind of how we did that. And I would just love to get your feedback on it, to be honest. I'd love to kind of update you on what we're doing, because I'm not sure when we did meet if I told you much about what we do.
Yeah, I don't remember, and so
Well, I get, because we didn't really change what we did. We changed how we position ourselves and talk about ourselves, probably more likely. Like when we first talked, it would have been around like we help people modernize, we help people improve, we help people adopt technology and improve their processes, and that just makes us a lot of things for a lot of people. And now we've really anchored down, and we work for nonprofits, for-profits, and First Nations organizations, and we help you with that foundation of your organization. The things you need in place, whether you want to grow, whether you want to sell, whether you want to, adopt AI or do a big change in the organization. But like what are the things that are but clear numbers month to month, like really good current monthly books is one of the foundations. Do you have a strategy? Do you have a direction you're going? Core. Do you have some level of process documentation so that I could pass the dead test if I get hit by a button? So a lot of the stuff you're talking about, like we specifically, we're not looking at the optimization, the future, but like what are the things that all organizations need at the base layer to be resilient, to not be thrown into to the winds when a couple people turn over, when the owner gets sick or wants to sell, so we position ourselves there, and it's been really a lot helpful, to really just focus in on where we're at. That's why we like so much the conversations, is because you're also what the universal foundations, that commonality piece fits in our kind of understanding as well.
And that's really where I think I said, my peers in my other CRI offices think they do what we do, because they would list all of those things that you just listed. Oh, we can do that. They can do that. They're not doing that. And what we found is our simple numbers consulting model is the perfect launch pad to identifying what does the business need. And so uh, I don't know how succinctly I said it in the book, but when I give a talk, I say, well, really, here's the simple number strategy for business is three things. One, figure out what is the need of the market. Number two, can I be profitable meeting that need? Number three, tell everybody about it. And so when you go in that sequence, and that's that's really the kind of the key of looking at it. And we felt like the highest apex need of the market was what we do in our initial planning session, which is tell you where you've been in a way that tells a story, tell you where you're at now along that journey, and then project if no changes are made, here's what the mathematical trends say you're headed for, good or bad. But with these interjections, here's what the potential is of your business. And when you can have that discussion, that secondarily opens up all of these other discussions that you just mentioned, because we do all that, and well, and we're honest too, though, in some areas that if it's really something that needs a third party to be introduced, I mean, we have either resources within CRI that does some specialty things that, we would refer to, or we have vendors that we've worked with other clients that have specialty areas, and we're not shy about it. If we have confidence to refer somebody in, happy, we take an agnostic approach. I don't have to look far every day to find something to do. So, if I take care of the need of the client, I'll be taken care of in the long run. I mean,
we're very similar.
Don't give away. But I believe that you have to have that apex service. And what we went to was you had to come into our practice through the consulting door. And so today we only do two things. We do consulting and we do outsourced bookkeeping. We don't do outsourced bookkeeping unless you're a consulting client. And that outsourced bookkeeping, sometimes we'll even pass on that engagement if it's too deep and beyond our resources. We'll refer it out, to another company that's more built for that. Normally, we're performing a portion of the bookkeeping function because they lack full staff either capability or capacity they just don't have enough time. And so
it's interesting to hear you say that, because for us, I think we're actually moving in a slightly different direction where we don't want to have our ego in the advisory place, because the biggest need we're seeing, because we mostly work with organizations under 200 people, and they're able to find the advice, or they read the book and they know what they want to do, but they're not able to implement. And so like really helping somebody implement the advice, like the select the software, the change the process, the get the 65-year-old dispatcher to use a new tool a new way because it makes so much difference to the company. Like that's the need, but we need the advisory. So we've been kind of playing around, like we're downstream of advisory, because we have HR consultants, we have executive coaches, we have accountants and CFOs, and the clients just don't feel like they can implement the internal changes. That's been where we've been kind of focusing.
Yeah, I kind of like. I'm kind of more of a top-down approach person versus bottom-up. And you see it in everything that we do. I mean, we always look at rolling 12 data first, never monthly first. Eventually, but it's well down the line. Months are distortive. They all have a bunch of excuses. Rolling 12, you can't hide. All 12 months, all 4 seasons, every dog ate your homework excuse. And so, I mean, businesses ebb and flow with the ability to execute. And if you're a trusted outside resource, you want to have the flexibility in your business model. And this comes with size where, one client turns something on and other client turns something off. You got enough capacity flow. And then also on top of that, if you're billing on a fixed price basis, you you don't panic when, Fred's not going to get his billable hours this month. Well, we're fine. I mean, we know we got enough clients, and if the new client funnel is working the way it's supposed to, it'll all be fine. But you have your operating zones. Here's your no-fly zone. Here's your running hot zone, and you're trying to live somewhere in between. And you're trying to not get to the no-fly zone before you take action. If you see that you're heading from hot to no-fly, hey, I'm pulling on the yoke middle way to say pull up, and start changing, because change doesn't happen overnight.
I got a question, because I love the idea of simplifying and applying, like it's a similar undercurrent to all businesses, especially when you clear out the distortions. Given where you're at and you have all these insights and this data, do you see any big future changes that is there anything that you're concerned about, or any trends or future disruption, technology, or just the way that generational change is coming that you're watching closely?
And how much time do you have? I mean, the first overall change that nobody has really honestly factored into their thinking is the demographic shift of population. And, if you believe Peter Zions' data, which I believe him far more than the UN, Africa is the only continent that will advance in population over the next 20 years. And Africa provides the least benefit to the rest of the world in terms of excess population. Even India will tip the replacement birth rate by 2030, early 2030s, somewhere around in there. And so the world without a growing population is something we've never experienced. The only moment that we experienced was during the bubonic plague, and that ushered in the Industrial Revolution, admittedly. But the population recovered, pretty quickly. And I don't see population trends recovering, from where they're at. We're going to be in a state of decline for a while. And now if the state of decline is very gradual, that's not so terrible. But I was a frequent critic of Jerome Powell, the U.S. Fed chair. But he said the most intelligent thing was his last statement before he left office. He said, "I hope that with the decline of the population and workforce, that AI it helps create production at the same rising rate as the production from human production falls." And that was the first government official that I have heard make an open comment that they actually knew that there was a problem. Now, I have zero hope that rate of fall and rate of growth is going to happen at the same rate.
Yeah.
And AI is equally destructive as it is creative, and probably a little more on the destructive than the creative. And so that is a big problem. When to use a college football term that we use in the South, in the United States, there is talent in the transfer portal. This is the softest job market that we've seen in 20 years. And so if you're looking for talent, the talent's out there, and it's filling up by the day. Most every company that we're working with are pretty much giving their team a mandate. We are adding no management labor unless it's an absolute critical function that we all agree on. And you got to do more with the labor you got before we're going to add. And we've got clients. We got one technology client that admittedly they're about 12 million in revenue. They believe they can double revenue and add no labor in the whole organization. So remains to be seen. Love the idea, but that is a disruptive environment in business. And our 100 company model tells us that when we slice it, we do a couple of slices. One slice is the ups versus the downs. When we slice the 100 company model, roughly 73, 75% on any given month is up of the revenue represented and the other 25-ish% is down. What is the distinction of why what is the characteristics of the ups? They're in the necessary industries. What's the characteristic of the downs? They're in the discretionary industries. So big takeaway. Next, we look at the over 10 million size companies versus the under 10 million. And that is shocking because I did a podcast a couple of months ago and I said, okay, talked about the black hole in the first book. Between 1 million and 5 million is the black hole. 3 million is the deepest, darkest moment of the black hole. Well, the black hole has moved. I think it starts at 3 million now and goes to 10. And the data is absolutely damning of what happens to you in that journey from 3 million to 10 million. You have to incur just to play the game at that 3 million plus size business. Your non-labor OPEX goes up 8% higher than the 2.5 million company below you and the $5 million company above you. And the cost of the chip value to get in the game is more than we've ever seen since we've been tracking business. And we've kind of coined a term called bring back Scrappy. And I think a lot of people have invested in a lot of things that give promise, but doesn't really play out. And I think we've got to bring back a new standard of critical thinking, of evaluation of initiatives that keep them on a short string of saying, listen, I'm not afraid to invest, but I'm going to turn off the investment if it doesn't start producing very quickly. And most of the things that you're spending money on are not 10-year investments. I mean, these are things that should produce early wins, but you're buying this AI tool or this piece of software or this, we're going to do this program and try this in marketing. And, it's just end of the day crickets. And there's not a strong enough discipline unless we stay on people's backs and keep it in front of their eyes. Hey, you got costs that you turned up and when are you going to turn it down? Because it's not working. So let's go back to, invest, but stop spending on the things that aren't working to give you more money to get back into, spending money on things that do work.
I see a lot of that, playing with new things and not seeing any measurable, even
Absolutely.
just measuring it. I'm not seeing.
That's right. Yeah.
Yeah.
And so, but beyond that, if the robots ever show up, they're touting a potential by late this year, a Chinese robot that's $5,900 that is armed with AI that can do basically repetitive tasks with hands, eyes. Yeah. That could be massively disruptive because the $25 an hour-ish wage class, they don't have any other options. And you could see, we're already seeing unemployment. A lot of the white collar is not showing up on the unemployment rolls because they're typically second wage earners. And they're doing like some gig work to kind of, just next time you're in an Uber, ask the Uber driver what they used to do. And you'll find, I think, half of the Uber drivers that I talk to when I travel were white collar workers that got laid off. Okay.
My original trade was a chef when my first business was food manufacturing. And I know people in the food space, and it's a wild, wild place.
Oh yeah. Really hard work too.
Hard work and can't find people to do it. And
yeah, absolutely. Yeah. So, so there's disruption coming. So
the Peter Zion was my kind of one source of truth for a while, and I'm still making my way through his book. But he's fantastic.
He got off the rails with Trump derangement syndrome for a little while, and he's kind of calmed down, and come back to the center, and is doing some more decent work again. But hey, just keep your feelings out of it and just give me the information that's not commonly available, and I'll make my
Hmm.
decision about the other stuff. Yeah, and but there's neither political party, the Fed, the Treasury. I mean, these, I wonder. I mean, do they really not know it, or they're just scared to talk about it? And I'm more convinced that they're really not. It's not on their radar.
Hmm.
And I keep asking every audience that I talk to. This is a common question. I mean, in the U.S., we have a flat to declining total population since we closed the border, and a flat to declining workforce. So, how do you have a growing economy if you have a flat to declining total population, a flat to declining total workforce? And so, the common answer from the audience is, "Oh, increased productivity with technology." Great. Well, let's play that out. Last time I checked, when you have supply and demand, if you increase supply and have no more people to buy it, what happens to prices? They fall. What is that called? A depression. That's not good.
Yeah,
So,
there's
Not
nobody.
funny. Just
and
that's
Yeah,
and then there's dead silence in the room going. And then that's where for my recent talks, I've earned the nickname Mr. Sunshine. So, but here's the
yeah,
sunshine. Here is the sunshine of it. You know what we're seeing in our 100 company model? The companies that are flawless in their execution across all disciplines are separating significantly from the pack.
I'd agree that for
For
sure.
the first time in 25 years, they're finally getting their reward, because they didn't get their reward when the economy was off the chart growing, because you didn't have to be good. You just had to show up, be available. And that was frustrating to my clients that were committed to run an excellent business. And some of them ended up getting out of business because, it really frustrated them. But now, excellence in operations is really the key. And those people are growing not from the market. The market's not growing that they're in. They're gaining market share. Now, market share has a dark side to it. There's a point that there's no more market share to go get. But in most businesses, there's plenty of market share for a while to go get. But I will say that most industries are looking at 20 to 30% of reduction of competitors and total competitors over the next 2 to 5 years, because it's
That's definitely
really,
what we're seeing
yeah,
in our region.
yeah,
Yeah, the number, like the aging out or the selling or the next, like it's going to
yep,
be a
yeah,
significant percentage of the businesses,
yeah.
especially the smaller
Some of
ones.
all things are pushing people out. Yeah,
Yeah,
yes,
for
absolutely.
mm,
sure.
But I like that environment. I like being rewarded for being good.
Mm.
And I think, if we don't see an excessive decline in population, which is, I mean, birth rates still continue or going down. They're not stalling.
Okay.
And you've got some really bad problems with China, South Korea, some of the key, countries around the world that are in implosion levels of population decline. That those are unknowns. I mean, and we can sit here and theorize, but none of us know until it plays out.
I'm anecdotally seeing a lot more, and I don't want to say it's just a younger generation, but I'm seeing a lot more people go into a business, not with profit, even in the top three reasons for going into business. That they're going into like for an impact or a change or provide a service or to help a specific problem solving. Are you seeing that, especially at the like 20 to 30 year olds now? No,
No,
not at
not
all, eh?
no. I mean,
Like the purpose business, almost like the triple
well,
bottom
I
line.
mean, there's always been people doing that, but I mean,
Yeah.
they're going to die. It's like, I mean, I here's the. I mean, I run into this all the time, and people say, "Oh, I'm going to do a nonprofit." Really? Do you understand that a nonprofit has to be profitable to survive?
Yeah.
Being called a nonprofit is a misnomer, because
Yeah.
when I joined EO, or when I was the first sitting chair of board member that was the finance chair for EO. And so when I got on the standing finance committee, they had lost money 2 consecutive years and had no reserves. And they were only surviving because they billed the next year's fees in advance a month before the year end. And that's the only reason why they had cash flow. And so I implemented the first ever that they still operate off of profit. They have to have a profit every year. And we take a portion of those profits and put it in the reserves until the reserves are fully funded, which now they are fully funded. And then the rest of the profits that you can spend on 1 to 3 year initiatives that are not, continuous budget items. It's impact, things. And fortunately, I mean, one of the things I was proud of is when EO went through COVID, they sailed through it fine because they had reserves. But if I had not implemented that profit concept and reserve concept in 2006, a lot of those organizations didn't live through that time frame because they didn't follow that mindset. And I don't care if you're a literal nonprofit or if you're a social, for profit or B Corp, as somebody people do in the States. But our philosophy is, I'll go back to our universal profit standard. If you're not at 15% profit to gross margin, you're underperforming. And if you get to single digits profit to gross margin, you're one bump away from being dead. And you can't operate a business like that unless you're operating like under a contract basis. And oh, by the way, sometimes contracts don't fulfill. And surprise, surprise, who you want to put your faith in. So
Yeah.
So, and that's the advantage. I mean, I do have perspective of doing this for 50 years. So I've seen a few things over my career.
Yeah.
Mm-hmm.
Yeah.
Colby, look deep in thought. Any thoughts as we come towards the?
This is going to be one of those ones where like I go for a long walk afterwards, and but even this whole like that, I'm actually really excited about that, like separating from the pack idea, because we truly believe in the work that we do, and it's just when there was like lumping us into certain categories of like who we're competing with and stuff, it's been a little bit muddy over the last few years. And I think this like, I believe in what you're saying, that clarity and that kind of,
well, and it didn't happen overnight for us. I had to fight my other partners. I'd find that we would let in a tax return client that we weren't doing consulting for. And I said, no, we talked about this, that just because we can do what they need doesn't mean they're a customer. Send them someplace else. And, you just gotta, draw the line and say, and I did early on also do economic line. And so I did the Pareto principle. And when we first started shifting to consulting, we did a Pareto principle of 80% of our revenue came from 20% of our clients. Well, at that 20th percentile, that client paid us $2,200 a year. So I said, first and foremost, I don't care what we do for them. If we don't make at least $2,200 a year on them, we do not want them as a client, because we have all these noise people that are below. So this was in 2003. By 2005, we'd moved that up to like 4,500. And then today, I mean, it's probably closer to like 12, 13,000, somewhere around there. And so, it's maybe a little slightly higher than that. It's like once you have your core, you can control it from a couple of different ways and make sure that you just don't get stuck doing things that just don't matter. And I never tell somebody that I'm an accountant when I'm sitting next to them on a plane, because the first thing out of their mouth is a tax question.
Yeah.
Which I can still answer, but I choose not to. There's this thing called Chat GPT that's really good at answering tax questions.
Yeah. So Colby told you a bit, I'm sure on the pre-call, like we're at the beginning stages of running a new bookkeeping service separate from our core services. It's exciting for us. Any words of wisdom or caution as we go into because the whole idea is that we're going to run it the way we want to have it. And I've always wanted it. Similar to the stuff you said, like I want people to be on my side and to hold us accountable and to keep things current. Any cautionary things we should consider or questions we should ask ourselves?
I mean, if I was building that today, I would find my most used talent base in the Philippines. I mean, what they cost you and what they produce is phenomenal. And you can't outrun the LER metric.
Yeah.
And we have a lot of clients that use Philippine resources, and we interface with them with our team, and I've just been very pleased. They got the right cultural mindset, they got the right work ethic, and a person that cost us $100,000 in the U.S., you're going to get over there for $2,000 a month. And so, I mean, it's unbeatable. Now, obviously, do everything you can of automation, but this is going to be a long time that you got to have some human in the loop. And I want the most productive humans in the loop that are working that. So that's where I would be building that skill set.
Mm-hmm. Yeah, that whole human in the loop thing. It's funny, we've actually used that exact term, and trying to bring this hospitality mindset to that service, because where we are, there's not, you hear from them twice a year type of thing.
Oh yeah.
And we want to be more involved in the business, and the whole idea is, as well as, like, this gets us in more conversations to talk about what else we do. Which is great.
That's the value of our monthly call. I mean, we get paid to market to our clients of the other things that we do, but that's not the purpose of the call. But there's the opportunity exists. But also, you can't just. So here's the thing to avoid: don't create touch points that don't add value. And so that touch point has to add value, has to be worthy of being scheduled and people dropping out of operational mode to drop in, and you have to deliver a call. And, and I will tell you, I mean, it can be daunting to, there's times that, even I think, okay, what else can I say to this client that we haven't already talked about? But a lot of times, because of you trust the process, trust the structure, that will come out and so a lot of it is the process leads the way to discovery of the need. And a lot of times it's just being attuned and being, listening, to the client, caring for their outcome. And when you get those ingredients involved, I mean, good things generally happen on organically.
Mm-hmm. Yeah. No, that's great advice. Great advice. Thank you.
Yeah. Cool.
Anything else that you want to share with us or ask us before we come to an end?
I think we gave everybody enough to chew on.
All right. Well, let's call that to an end. Thank you very much. Like, again, I think we can think about it further, and I can't wait to be sending you people because I know that we don't want to become advisors of this space. We want them to help the day to day. So when they're like, what are my metrics? How do I do it? I was like, great, I have a phone number for you.
No.
Excited to be on that end of things.
Yeah, they just go to simplenumberscri.com and fill out the contact form, and Mike Maxson will be in touch almost immediately. So.
Love it.
Thank you very much.
All right, good deal.
Thank you,
All right,
Greg.
appreciate it, guys. All right, have a good one.
This episode of Built to Last is brought to you by Ironhouse Pro, your behind-the-scenes partner in building organizations designed to thrive. We specialize in solving the big challenges, the small annoyances, and everything in between. So while you're out there dreaming big, we're here making sure Your systems, processes, and people are ready for tomorrow. Ironhouse Pro, driven to create lasting organizations. Learn more at ironhousepro.com.